Hello, everybody. This is Tom Mastromato and People's Mortgage Company. Welcome to the call, and I look forward to answering all of your questions about why a reverse mortgage might be right for you. And I say might because we don't want to hard sell anybody. I just want to give you the straight information and show you the power of this program, and then some people will decide, maybe you, that a reverse mortgage might help you, and if you don't, then at least you'll be fully informed. So there's not going to be any slick sales pitch or anything like that. I'm just going to give you the straight information, and I'll let you make a decision, because for some people it is really a wonderful tool that will improve your financing. It'll reduce your taxes, it'll improve the liquid cash flow, and overall it will make you money. And but that's not the case for everybody, so I'll give you the information. I've got everybody here on mute. If any questions come up during the presentation, and right now this is a live presentation. We will have this later on replay for some others, but it's a live presentation. If you've got any questions, just drop them in the side, and I will make sure to either cover it or I will get back to you personally and just make sure you get your questions answered. So, as I mentioned, this is Tom Mastromato. I am the Director of Senior Programs and Reverse Mortgage Products, and I'm at People's Mortgage Company. You can see my smiling mug. Let's jump in. Let's get started. So we're going to talk about retirement financing strategies. Now, all of us are going to retire, and the goal of this is this call is to empower you to take more control over your retirement. And I think that most of our clients aren't on the floor scraping for loose change, as it were. It's not, that they're poverty stricken. But this is a wonderful tool to know of, even if you don't need it right now, in the sense that you dig your well before you're thirsty, right? You don't wait till you're thirsty to start digging the well. You dig it in advance. So this can be a tool that can improve your financial position. And we'll talk about some of the myths and some of the reasons that people are sometimes scared of reverse mortgages, or they think, oh, I'm going to lose my house to the bank. That's actually not true. We're going to talk about some of the myths. So in this presentation, I've put all the best information, and I've carefully researched to make sure that I cover what people want to know. So let's jump in and talk about what we're going to cover. So first off is, why should I care? Why should I even consider getting a reverse mortgage? Now, there may be a few people, and you're looking at this right now and said, oh, I know that I don't want a reverse mortgage. Hang tight and just give me a few minutes and learn about the product, and then you may conclude, yes, you don't want a reverse mortgage for right now. Or you might decide, hey, I should get one, and here's why, and here's something I didn't consider before. So I want to make sure and answer everybody's questions, and I'll tell you why you should care. Two, we're going to talk about what really is a reverse mortgage. You'll also see sprinkled throughout something we in the industry call HECM, and that's Home Equity Conversion Mortgage. We'll talk about that in a bit, but there's nothing much to know. We're going to talk about reverse mortgage myths, and we're going to cover reverse mortgage scams, and then also how to prevent those scams. And then last, we're going to cover what's next if you decide to proceed. If you do decide that this is right for you, then we'll talk about what's the process and what does it look like to actually get one. As I mentioned, I think I've pretty much, we're going to cover a frequently asked questions and some of the pros and cons. That's sort of woven throughout, so I don't have a dedicated section for that, but you'll hear me cover that as well. So first, the basics. With a regular forward mortgage, you borrow a lump sum of money and then pay the bank back steadily over time. The balance decreases with time until eventually it's paid off. Now, sometimes, especially people that were given information by, let's say, their grandparents in the Depression, for example, pre-Depression, banks weren't as regulated as they are now. Right now, it is extremely hard for a bank to foreclose on a property. The government is very protective. The government wants to encourage people to own homes, and they know that most people don't have a few $100,000 lying around, at least when they're young and they need to go buy a house, without a lot of family support, and even then most people don't have it. So most people get a mortgage. That's what most people do. And banks are highly regulated. It used to be that pre-Depression, banks could foreclose on property owners pretty easily. And so it was really common for people of that generation and that era to really want to pay off their house. And the reason is because their parents had this risk and this sense of risk, or maybe they knew of somebody, hopefully it didn't happen to them, but it was maybe some friend of a friend, where the bank came and took their property, and it wasn't because they didn't make their their payments or something like that. These days, foreclosures are tough. Banks take months and sometimes even years to even foreclose on a property. That's part of the climate, the economic climate that we have today. So anyway, with a forward mortgage, you borrow a lump sum and then you pay it back over time, and that money never comes back. Now with a reverse mortgage, the money flows in the opposite direction. The balance starts kind of low, and then it grows over time as the bank pays you. Now sometimes what can happen is the bank can pay you in a big lump sum all at once, and basically over time the balance is accruing, and you're eventually going to leave that property. All of us eventually either die, we sell, or we move, right? And that's when the loan is due. And it's common for properties to be sold with a mortgage. It happens all the time. It's probably happened to you. If you've moved, chances are your house wasn't necessarily paid off. And when you did that, it was no big deal, right? The bank gets their money first. Whatever money's left over goes to you. So you sell a property for $200,000 and you had a $100,000 mortgage, then you get roughly $100,000. Obviously, there's transaction costs and stuff like that in the mix, but you get $100,000 cash, and then you go and you get another house and you put some of that cash down and you probably got another mortgage. That's how it is for most people. With a reverse mortgage, you never need to make any payments, but the balance is accruing over time, but that can be a good financial tool. So that's the basics of what a reverse mortgage is. Now, how long do they know you're going to live? They use life insurance tables, right? If the youngest borrower, to be technical, is much older and you have a lot of equity in your house, then you can get a lot more money. If you don't have as much equity and you're only 62 in one day, for example, then you're not going to get as much because, like I said, the banks are using life insurance tables. So hopefully you live to 120 or 120 plus and really maximize the power of a reverse mortgage. As I mentioned, the bank pays you either via an upfront lump sum of cash, right? They just give you a lump sum, or they give you a set monthly amount, which is basically looks like income, feels like income. Technically it's not, which is good because of taxes. You can get an equity line that you just draw on as needed, and that is actually most common, and that's for the people that say, I don't really need a reverse mortgage. Like I said, dig the well before you're thirsty, and then you don't have to pull any water out of it until you're thirsty, right? And that's what an equity line is it's just there in case you need it, and you're not accruing any interest, so that's a popular option. Or you can do a mix of these. Sometimes people need a little bit of cash up front, and they want maybe an equity line and maybe a set monthly amount that's kind of low at the beginning. I think most of us would agree that your retirement expenses are going to increase over time, not decrease. So there's inflation in the mix, right? Things just simply get more expensive over time. I'm sure everybody on this call remembers when things were a lot cheaper. When each of us were young, that was the case, and things are just more expensive now. And that's the nature of currency. But in addition to that, certain things are going to go up. For example, it's common for our clients to need to make some handicap accessibility issues, or maybe they just want to move down some counters or make some house modifications, or they have increased medical expenses. Those are all common. So again, that's another reason to dig that well before you're thirsty and just leave it there if you don't need it now, or you can start accessing it and start to build your portfolio. Next, let's get to why care. Why should I care about this, and why is this such a powerful financial product, and how can it make my life better? All right, let's dig into it. So first off, for those younger borrowers, Social Security deferral, right? If you wait to collect on Social Security, you will collect a higher amount, right? And so you can kind of gap that time, collect a higher amount, and it can be a great way to kind of close that gap. Related to that is 401k or IRA or whatever retirement you have, whatever type of retirement, stretching, right? We're going to stretch it out. We're going to make it last as long as possible. And related to that is even if you're already collecting Social Security, you started collecting, you can't really, I don't think it's too possible to put that money back, but meaning, you can't just go and tell them to pause it and still collect the higher amount. But if you're already collecting, then starting to build a cash nest egg will extend your retirement dollars, and the expenses are likely to increase over time, not decrease. As I mentioned, most of our clients are not poverty-stricken, so this isn't necessarily, and I think sometimes people are a little reticent to take equity out of their house, but the truth is it's an underperforming asset. This can be a way to keep the asset and just leverage from it. A reverse mortgage is a way for your home to pay you back, but you still get to keep it for all those years you've paid into it. Next is investment timing, and this is maybe the most common reason why people get it, is you can sell when stocks are higher, at a higher price. You can keep your real estate investments in place. If you've got rental properties or land that you're intending to develop on, or property you're going to flip or something like that, sometimes people just want some time so they can wait for those stocks to go back to a higher value, or they can wait for those real estate prices to come back up and sell it at a good time. Or if you've got CDs or bonds or something like that, some of those are time-based investments. So you can just get a reverse mortgage temporarily. And this is one of the myths. You can pay off a reverse mortgage at any time. So let's say you've got some investments that are coming up in 5 years, right? And you need some cash for the short term. This can be a powerful way to access that cash at a pretty tax-favored method. So you can take advantage of today's economy. Sometimes people choose to buy investments with the cash as a means to extend and improve the quality of one's retirement. So you can basically, stocks are fairly low right now. Certain stocks anyway. Certain stocks are doing quite fine, and others not so well. So anyway, you can take advantage of today's economy to buy great investments at depressed prices. That includes real estate or whatever you choose. And as I mentioned, reverse mortgages can be paid off at any time. There's no prepayment penalty. And so you can use it temporarily for a few years while your investments regain value. Next, and this is a really legitimate reason purely by itself, and I should insert a disclaimer here. I am a reverse mortgage expert. I'm not a licensed tax professional, so I will insert the disclaimer here. Talk to a CPA, talk to an enrolled agent, a licensed tax professional, somebody who's qualified to really dig into the taxes of your situation. All of that said, loan proceeds are not taxable as income. Your primary residence interest deduction offsets your taxes at time of leaving the property. So reverse mortgages definitely trigger a powerful tax write-off, and it can be a really powerful way to reduce your taxes and actually still do exactly what you want in a more tax-advantaged fashion. Related to that is tax-advantaged gifting. So currently, as of 2012, $13,000 per year is tax-free to be given to heirs, to family, whatever, completely tax-free, instead of the more common sort of people who don't think about it and they just sort of take the default path, I should say, which would be a lump sum, and that may be not just fully taxed, but even double taxed, which is the on the estate taxes side, and then again as income to the recipient because it's more than $13,000. So by stretching out that income, you can really reduce the taxes to your heirs if you're intending to give money to your family members, your charity, or whoever, loved ones around you, whatever that you choose. And again, like I said, talk to a qualified tax professional. Last, and this is really important, is liquidity. So I keep mentioning that phrase, dig your well before you're thirsty. Well, it's better to have the well dug and be able to access it in a bucket in hand so that when a drought comes around, you're prepared, right? And cash is king. It's always going to be. Cash in the bank before you need it allows you flexibility and options. You can respond to medical and dental needs, investment opportunities, pay off bills, home repairs and upgrades, travel, children. You can make gifts to children and grandchildren, or even just enjoy it while you're able to, right? None of us are going to take the money with us, and you're not going to take home equity with you, and a reverse mortgage still allows you to give that property to your heirs, and we'll get into that in a bit. Like I said, none of us are going to take it with us, so might as well enjoy it a little bit before you go, and it can also improve your overall finances. Now, this is comes with a disclaimer, and that disclaimer is there to protect you. I'm going to talk about something that some people do, and this is an advanced strategy that is not for the people who don't know what I'm saying here. So if you don't understand any of this, then don't do it. I just want to draw your attention to something that some borrowers do, and I'm being careful because I want to steer on the good side of the SEC, the Securities and Exchange Commission, but they're also out to protect you, right? So all of that said, here's what I'm talking about, arbitrage, which is earning a greater rate than the cost to borrow. So for example, if you borrowed at 4.5% and you can make 7% on an investment with a financial planner, then it would make sense to borrow as much as you can, right? That's the basis of arbitrage, right? Borrow at 7 and earn 8, or borrow at 5 and earn 7, whatever it is. Now, that said, I've got to drop this in. One should never use an instrument for which one's primary residence is security to purchase an unsecured investment asset, which is unsecured, which may lose value, and thus risk the net stability of one's home. And, the SEC would prohibit us from recommending this strategy, and it's with a good reason. It's to protect you. That said, some people understand the risks, and they are financially savvy enough to get it, and they have a financial planner that is confident that they can earn more than the cost to borrow. And so it's possible to increase one's net investment while at the same time increasing one's tax write-off. So it can be a powerful tool for those who choose to go down that road. And again, I'm not recommending it. I am just letting you know that some people do it. So next is real estate improvements, such as updates to the home while you're around to enjoy it. You know, if you've been dreaming of a great kitchen, why not get it? You've got the home, you've got the equity. The equity's kind of sitting there, and your property is going to go up and down in value regardless of whether it's leveraged or not, regardless of whether mortgage is on the property or not. It still goes up in value or down. But I think you know what I'm saying. Handicapped accessibility, that's common, especially as borrowers get up there in years. And it's not even just handicapped accessibility. You might not, hopefully you don't need a wheelchair and a ramp, but if you do, you're healthy in other ways. It could be, little things like just making the bathrooms more comfortable, for example. Maintenance to increase the value of it for when it is sold. A lot of times borrowers that have been in their properties for a long time have some deferred maintenance. And home buyers that are out there, they're kind of expecting a certain level of property. And so your property is eventually going to be sold or given to family, one of the two, in which case you may choose to update the property a bit, and it's going to help your equity. Next is maybe a guest house for family, or just updates to the property to make more accommodations for spending more time with loved ones who can increase the quality of your retirement. A reverse mortgage on one's primary residence. I need to drop this in because it's kind of related. A reverse mortgage on one's primary residence can provide a large down payment for investment real estate or second homes, or a down payment for family. You can use the funds really for whatever. I'm just drawing your attention to that you can't get a reverse mortgage for a rental property, but you can get one on your primary and then use those funds to buy a rental property, for example, and thus start collecting some rental income. Next is to purchase a home. This is something that is unique for me. I'm an expert at this, and this is not exactly common. You can purchase a home using a reverse mortgage or a home equity conversion mortgage. Example cases: sell a home for $250,000, which was free and clear, no mortgage, and buy a home closer to family. So in this particular case, it was a great case, right? Sell a home for $250,000 in, let's say, Arizona, right? No mortgage. And buy a home closer to family. In this case, it was Southern California, where the properties are really expensive, but you get to be really close to the family for $600,000. Now, interesting in this, I kind of geek out about this stuff because it's about people's finances and about making them some money, is properties increase and decrease in value based on the net value of that property. Meaning, if properties if let's say both of these homes go up by 10%, well, the $250,000 house that goes up by 10% is obviously $25,000, right? A $600,000 property that goes up 10%, let's say even it's over a number of years. Let's say it's a whole decade. That's still $60,000 instead of $25,000. And even after the move into the $600,000 property, in this case it was California, still zero mortgage payment, right? And still, so no cash flow issues, and still has some equity in the property to give away to family, and gets a better quality of retirement. That sort of thing really, it makes me excited because it's improving the life of a senior like yourself. So in this case, it was a $221,000 $963 down payment, and that was for an age 70 borrower. Another case: sell a home for $200,000, no mortgage, and buy a newer, nicer home in a 55-plus community for $200,000, and pocket, invest, or bank some of that cash, right? And so that's just freeing up some cash that was otherwise locked in the home and kind of an underperforming asset, and putting some of that in your pocket, in your bank, and investing and doing what you like with it. So in this case, it was a $77,000 $153 down payment for an age 70 borrower, leaving about $110,000 in cash. Last is avoiding a foreclosure before it happens. I've seen cases where borrowers really needed some money. Now, with a reverse mortgage refinance, which is most common, you can avoid foreclosure even if you've got some late payments. And there's a bit of fine print here, so contact me about your specifics. I'm not going to get into every little thing. But if you've got some late payments, you can still get a reverse mortgage because it's not really based on your credit. It's based on your age and the equity in the property and that sort of thing. So for the moment, that is likely to change in the near future. But anyway, with the purchase of a home, you can avoid a foreclosure and downsize before it happens, and really kind of help reduce the impact on your credit and protect yourself and still keep a nice roof over your head and downsize, which is something that senior wanted to do anyway. So a bit of fine print with a purchase. There's no multifamily. You can't buy a fourplex with this, but you can refinance a fourplex if you already own one and you're living in it as your primary residence. Quick sidebar, unique purchase features is, again, the youngest borrower has to be 62 plus. There's no monthly payments. Of course, that's standard with any reverse mortgage. It is FHA insured, so Federal Housing Authority insured, non-recourse loan. Now, non-recourse is really important. Regular mortgages are not non-recourse. What that means to you on the benefit side is you can never be upside down with a reverse mortgage. It's not possible. It's a non-recourse loan, and only the property is collateral for that loan. They can't go after your estate in any other fashion. That's unlike a regular mortgage. So let's say that hypothetically you bought a property with a regular mortgage for $400,000, and you had a $400,000 mortgage in this hypothetical example, and the property went down to $300,000. With a regular mortgage, there's a $100,000 deficiency, and they could come after your estate. But that's with a regular mortgage. In the case of a reverse mortgage, you can never be upside down, and there's nothing to ever go after. So you're very protected, and it's a unique property to help out seniors, or a unique program, I should say. Primary homes only, again, that's only for purchases, right? So no multi-units. There's also some other fine print. You can't have a log home, for example. It can be a log siding home and a log looking home, as long as it's not structurally a log home. Those types of things. Just contact me. I don't want to get into every single little thing, but give you a good overall overview with this presentation. The older the borrower, the greater the percentage of property value or loan to value lent. Smaller down payment as one ages equals low down. And currently, credit score isn't a factor, but that's probably going to change in the near future. So if you think your credit is less than ideal, then most seniors actually have really great credit because they've learned their lessons by that point. But if you think credit might be an issue, then I would encourage you to move quickly on this program because it is likely to change in the coming next year or two. And it's easier qualifying. All of these are pretty easy to qualify because, again, they're pretty much based on the equity in the property and your age. Last, summing up, is why consider a reverse mortgage? Why do I care? You can do anything you want with that money. It's really your money. You can travel. You can take that dream vacation that's on your bucket list. You can do whatever you want with it. You can pay off bills, gift to family. Again, that can trigger some wonderful tax benefits, medical and dental. Tax is better with teeth. Funny, I must have put that in late at night, but anyway. Let's cover some of the myths. One is that the bank owns your home. That is patently false. Any mortgage, including a forward mortgage or a reverse mortgage, you always own the property. First, it's a financing instrument like any regular mortgage. Banks are very highly regulated, and a reverse mortgage foreclosure is extremely rare. For example, a house burns down and you have canceled your homeowner's insurance, right? The bank, anytime you have a mortgage, the bank is going to require you to have what's called hazard insurance, naming them as the payee. They want to protect their collateral, right? So let's say, hypothetically, that you canceled your insurance and then your home burned down, both of which are very rare. Then the bank is going to say, hey, we want our money back, right? Because your collateral has disappeared. Then, that's going to result in a foreclosure. But it really is that rare. So you retain title to your home in all cases. Next myth, and this is a common one, is that the bank can force you to leave. Again, this was common before the Depression. Banks began to be very highly regulated because the U.S. government realized that we needed people to own houses. It was essential to the stability of the United States. So they put a lot of laws on them and regarding foreclosure, and it's tough, and that's why the average foreclosure turnaround time right now for some of these banks is 24 to 36 months. To take back a property. So anyway, the bank can't force you to leave ever. It's a financing instrument like a regular mortgage, and they're very highly regulated, and a reverse mortgage foreclosure is extremely rare. The Federal Housing Authority prohibits any form of force or persuasion to leave, provided you still live in the home as your primary residence. That means that it's not a rental, it's not your vacation home, and you haven't moved to assisted living or anything like that. You're still living in the property as your primary residence. Next myth, and it's false, is you can owe more than the value. This is exciting. This is a really powerful clause. Is a reverse mortgage is non-recourse. Unlike a regular forward mortgage, which can leave you upside down, you can walk away free, no damage, even if you live to 120 plus and your property values plummet. You are still never on the hook for more than the actual mortgage on the property. You can never owe more than the property with a reverse mortgage. and they can't touch any of your investments or cash. Another reverse mortgage myth is that your heirs won't get the home. Just like any other property sold or given away, just like a property sold or given away with a mortgage on it, the loan is paid off when it's sold, or it can be refinanced into a new forward regular mortgage in the heir's name. So let's say, hypothetically, you want to give this property to one of your kids, right? Or all of your kids. In that case, whatever equity is in the property, whoever decides to live in that house, assuming that, usually, having dealt with this before, usually it's one kid that's going to keep the property and live in it and make it their home, and they're going to get a new mortgage and pay off some of the other heirs. That's typically what happens. So they're going to have to refinance it. So they'll still get the property just as normal, or it can be sold and the funds are distributed just like any other mortgage, and then dispersed as per your will or your trust, whatever you have defined. Common myth: your home must be debt-free to qualify. That's not true at all. If there's an existing mortgage, it must be paid off, along with any other liens, such as tax liens, first during the closing. So when you get a reverse mortgage, if you have any liens, including a mortgage, it'll just get paid off. That's all. Commonly with seniors, they have a small mortgage. I would say that's fairly common. Sometimes it's paid off in full. Sometimes they've got a mortgage of $13,000 or who knows what, some small amount, and that's just rolled over into the new reverse mortgage. Here's another myth: you'll lose your Social Security or Medicare, which is not true. This is a myth. Loan proceeds are never income. In certain rare circumstances, it may affect Medicaid. It could also affect food stamps for people that are on public assistance programs. It could affect that sort of thing. But if you're on Medicaid, we even got options. Just call us, and you could do the LIBOR line of credit. Let's touch on reverse mortgage scams. Now, there's a lot of seniors who are scared of reverse mortgage scams, but the truth is they very few involve the actual mortgage instrument. Again, I'm going to repeat that. Reverse mortgage scams, very few involve the actual mortgage instrument. They usually involve scamming people out of money once the mortgage is done with the loan proceeds, right? So you do reverse mortgage. For example's sake, let's say you've got a house that's worth $400,000, right? A really nice big house. It's worth $400,000. You get a reverse mortgage of a couple $100,000. You've now got a lump sum of cash that you can either access or you get it as cash. That's when the scam usually occurs. It's not the actual mortgage instrument. And this is from Peter Bell, the president of the National Reverse Mortgage Lenders Association. Unfortunately, and this is a bit insidious, so you want to be cautious and be educated, it often involves someone close and known to the senior. It might be a friend of a friend. Hopefully this wouldn't, your family is all trustworthy, but that's how these things do occur. So another catchphrase is, if you don't know jewels, know the jeweler, right? So have some trusted advisors on your side. So let's talk about a few other specifics. One is document fraud. This is usually a small dollar amount scam, but basically what they do is operators simply mail out official-looking letters requesting money for documents that are free and or on file with the original lender. Solution: read your mail carefully. Don't call the number on the letter. If you get a letter in the mail claiming to be from your bank, look up the bank's number on a statement or walk into the bank, talk to them in person, because they could have a fake phone number on their mailing, right? So just read your mail carefully. That's it. And don't necessarily send money if somebody sends you something once you get a reverse mortgage. This was usually after the reverse mortgage is done, because all mortgages are public record in some fashion, and so it's all right. This lien is existing to make sure that they get paid. Anyway, you just want to be careful that when you get mail that looks official and says, "Hey, send me $78," then to get a copy of this document, or send me $300 to get a copy of this document, you may not need to do that. Call your lender if you're not sure. But that's often the case. And I will say, having researched this for this presentation, this is usually a smaller dollar amount. If people are scammed, it's usually, like I said, $78 for something that is free, so that's not a huge dollar amount, but I don't want you to be scammed out of even $5. So, research it, and if you're not sure, then talk to an expert or go into the bank. Next is equity theft, and this is complicated and not as common, and again is often involves somebody who knows the senior, and it's really sad when it happens, but it isn't the mortgage instrument itself. The reverse mortgage isn't really the problem. It often involves signing over the home or repurchasing a discounted home at an inflated value. So, for example, an operator buys a foreclosure for $100,000, sell it to the senior for $200,000 based on a fake appraisal, and then gets a reverse mortgage on it. And basically, it's called equity theft because the reverse mortgage is then in this property, and they like to target seniors for this because the reverse mortgages are non-recourse. They know that they're not going to go after the senior for any of that money, and so it's they think a victimless crime, but it's actually the bank kind of left holding the bag. So if somebody's offering a free house, for example, that's usually how these things show up. They offer a free house, and they say, oh, we'll get you a free house, and you're going to live in this property. It's probably a little too good to be true, and as I mentioned, if you don't know Jules, know the jeweler. So keep some trusted advisors and check into people's reputations. And fortunately, I think these days, with the internet, it's easier than ever to know who to trust, because bad operators, they won't have any good evidence. They might not have any bad evidence, but they won't have any good evidence. But people who are good at their jobs, these days, there's usually some evidence of that online. So big title companies, big closing companies that handle all the closing and the paperwork, they're going to have reviews. And if you don't see any reviews, that might be a yellow flag. It might not be a red flag, but it might be a yellow flag. Next is complicated explanations of use of proceeds, i.e. the senior thinks they're getting a line of credit, but they're actually getting a lump sum, which is then transferred to the scammer, right? So you have to just read the paperwork and take your time. Don't let anybody ever pressure you into hurrying or rushing or not reading the fine print. So free homes, I touched on that. Scammers offer a free home based on an inflated or fake appraisal. And again, they like reverse mortgages and they like seniors because seniors are less likely to catch some of these details. And they might also feel embarrassed. They might feel embarrassed that they got scammed, and they don't want to tell their family because then their family say, oh, you're not in a position to care for your own finances anymore. And so sometimes they won't say anything. Whereas the best thing, if that were to ever happen, which again is not going to be because of the reverse mortgage, it's going to be because of the use of the proceeds from a reverse mortgage. If that were to ever happen, then call the police, right? That shouldn't be happening, and I'm putting this up so that it doesn't happen to you. A couple tips on scam prevention: choose your own reverse mortgage counselor. Now, if you decide to proceed, you're going to be required by law to see a reverse mortgage counselor. And it's a very simple little thing, but their job is to make sure you are fully informed and not being pushed into this or steered into this by family or something like that. But I don't want to steer you to somebody who would be on the inside. And so with a reverse mortgage, sometimes the shady operators, they'll say, oh, you're going to use this company, right? They'll give you one choice, and that person is sort of inside on the scam. You can get a list of at least 10 counselors, right? So we've got a big list, and they're public record, and you can find some. We've got plenty for you, right? So I'll give you at least 3, and actually I'll just give you a list, and it'll have more than 10 on it. And don't be afraid to ask for more information. Take your time to read the documents. You don't need to be rushed, and it's okay to say no. We want you to be fully informed. This is a really powerful product, and it can do wonderful things for people's retirement, and it can make you more than the cost of the fees. The fees are very modest, and in most cases they're rolled into the loan proceeds, and all of that will be given up front well before you ever make a decision. So I only get paid on success. Let's talk about the process. So for those who saw the why do I care, they say, hey, I've got some use of funds. I want to increase my tax write-offs. I need some of that money as a stopgap between to stretch out the retirement or increase the quality of retirement. And if you decide that you're ready to proceed, you decide you're ready to dig that well before you're thirsty, then here's the process. Step 1, call us, which really means call me. And that first call is not a sales call. It's a consultation. And what I want to find out is whether reverse mortgage is right for you. What are you going to use it for the funds? And I very much rely on word of mouth and referrals. And so I don't really do the high pressure thing. It's not a good thing for seniors. I don't think it's ethical. And I don't like it any more than you do. So I don't do it. And there's no upfront fees. Next is the application. Of course, I help you with that. We can do most of that just over the phone. Next is the HUD counseling, and you'll actually meet with somebody physically in person. And they just want to make sure that you fully understand the program, what you're getting into. And that sounds even kind of dangerous, but that's there to protect you, right? And you want to make sure that you have your questions answered and make an informed decision. Next is processing. Once you decide to, let's say, okay, I know what I'm getting, and this sounds great. I'm going to increase my tax write-off. I'm going to have more cash in my pocket. I'm going to spend more time with family. I'm going to give money to my family in a more tax-advantaged fashion. All of these things sound great. Let's do it. Then you get into processing, and that's work on our side, and then you get into underwriting, that's work on the bank side, and then we get to closing, and you'll have some papers to sign. I want you to take your time with that. Take your time and read it. It's okay. You'll bore yourself to tears, but I want you to read it, right? You've got 3 days even after that, which is called your right of rescission, to back out. If you have any questions, call me. Of course, I'll be happy to walk you through that and show you in black and white on the paper the actual documents, or you can call the closing company. And last is the money's available. And at that point, you can start those home improvements. You can take that, you can book that dream vacation on your bucket list. You know, like I said, none of us take the money with us, so why not have a bit of fun with it and improve your finances and increase your tax write-off? You can do all of those things with a reverse mortgage. So I hope this has helped you. I am an expert. I know what I'm doing, and I hope that sharing this information with you has helped you understand how this can improve the quality and the length of time and reduce your dependence on family if that's the case, or allow you to spend more time with the people that are loved ones to you. So call me, Tom Mastromato, at 888-769-7023. That's 7 days a week. I should probably put some more space in there, but anyway, that's 769-7023. And I work, you know, it's just me. You'll get me. So leave a message, and I'll call you if it's on the weekend, but I'm happy to help. You can also learn more about what we do, slideshare.net, reverse mortgage secrets. We've got some reports, but I've pretty much covered everything here. So the next step is to answer your specific questions. So I've covered most of the general questions. Now you're kind of wondering, what about this? What about that? Can you do this type of property? Or how much can I get? Or how much is this going to cost? Or what are the fees? Those are all discussions I should have with you because they vary for each person. So I look forward to chatting with you in person. I appreciate your time, and I look forward to helping you get the retirement you want and deserve.